Do you want to broaden out our conversation, though, talk more broadly about the earnings season we've got coming our way with Ted Thatcher, president of Bright Lake Wealth Management. Ted, great to have you on the show. Now, let's just dive right into earnings and earnings expectation for Q2 here. You said something great in the notes you sent over. You said it's all about who blinks first. So who are you looking for to blink first?
Yeah, I mean, ultimately, Marley, so much of the narrative, first half of this year with the hyperscaler names, the Mag 7 names, has been basically calling them the Lag 7. They've been the ones pushing, market valuations higher and higher, really since 2022. And so because they've been so punished for all that capex spending, completely eating up their free cash flow, I think the narrative that they have to battle this quarter is going to be that capex spending and how they're going to discipline themselves to actually get through this and see more ROI that the street wants. In terms of who I expect first, I think, Amazon has a pretty strong story right now. Google has a pretty strong story. My eye starts to go toward, some of the conversations, around Meta, how they're spending. Are they going to, maybe take some of the, potential of selling equity into the markets off the table? Those types of things spook the markets. And so there's going to be this conversation around earnings and then quality of earnings. I think that the first narrative I expect is going to be actually a push toward some of these balance sheet earnings. So many of these Mag 7 hyperscaler names have stakes in SpaceX, have stakes in the frontier models, Anthropic, OpenAI. Those are not operationally driven earnings. Of course, they look great on paper, but the market is going to want to see some answer, of course, for the amount of spend that they've been putting out.
And Ted, we've had this ongoing conversation, and it's something you also pointed out in your notes. Alex Coffey, who I was just talking to, made this great chart a few weeks ago about the divergence of the check writers versus the check cashers, and how we've seen a lot of success from the suppliers and those cashing the checks, and we've seen a pretty significant beatdown of the people who are writing the checks. So as you look at us coming into this earnings season, are you expecting us to see a turning point here where we start to see less of a divergence in those two sectors?
Yeah, I think, Marley, if the way I look at it fundamentally is they have a very slim tightrope to walk. Truly, though, there is a demand, of course, on the semis, the chips, the memory names that Alex, I think, really well has highlighted. I've seen that chart that you're referring to, the bifurcation there. So that divergence, the asymmetry there, I think has caught a lot of investors, by surprise because they've been cashing these checks, and you'd think that the big companies would be, able to turn ROI a little bit quicker. If they can find this middle path, if you will, in the narratives coming out of this quarter, I do think that there's a world where demand, of course, still stays there for the semi names. It's gone through a little bit of a pullback here, but we're still really early innings in this AI build out. $11 trillion is what I have kept citing as the amount of spend between now and 2030. I don't see that demand disappearing anytime soon. I think we've talked about it as well. So much of that, and let's just compress the time frame. Next year, another $1.1 trillion is going to get spent on this build out. 30 to 40% of that is going to be consumed by basically three names: Micron, SK Hynix, and Samsung, because the constraint right now in memory is that DRAM and HBM, high bandwidth memory, and they're the only three that can do it. And so I do think that there is a middle path, but right now, short term, because of the trade-off that has been made, that the market has been pricing in differently, I think I expect a little bit more chop on the semis. And there's a potential here, I think, for a handoff back to some of those Mag 7 names.
And you also mentioned the stakes that some of those names have in OpenAI, in Anthropic, in SpaceX. How should investors be thinking about how gains from the stakes in those companies are showing up in earnings? Now we've got SpaceX being publicly traded. The other two could be coming soon, with a question mark here. How should we be looking at that and those potential gains?
Fundamentally, Marley, I think it's a nice bolster, if you will, buoy on some of the valuations and concerns that the street and investors may have. Obviously, if you're worried about the potential disruption of AI and you still have this huge stake in the potential, upside of that, I think it's a nice protection to the downside. Obviously, names like Microsoft could be included here. It's amazing, actually, to me to see a company that's so well run, led by Satya and obviously fundamentally just a great CEO with so much operational ability behind them. To see them trading at a value like this, it's kind of nice to know the value that they have in OpenAI, say. And so that's what I think investors can count on and how I would start to look at that.
And Ted, as you're looking at the broader AI ecosystem and the landscape right now, where are you seeing the most opportunity with the setup that we have coming into earnings right now?
Look, I think I would say, look at this through two different lenses, sort of a short-term lens, Marley, and a little bit of a longer-term one. I like the longer-term one more, but I'll start with the short. Fundamentally, the semis, memory chips, like we've talked about, have been huge winners here. I think if you're really aggressive as an investor, there is still some potential juice. You could kind of buy the chip dip, if you will. Fundamentally, a little bit longer-term, I'm okay with that. Like I said before, I do expect more chop in that sector, though. But to come back to some of these big names, when you look at what has driven the markets for years and years now, it's the concentration of the markets. It's the Mag 7 names. And so when I see names like NVIDIA, Microsoft, Meta trading the way they have, it's hard not to be a little bit attracted to those forward price to earnings ratios. And so that is definitely where I think, especially long term, there's some upside for investors.
Well, I mean, there's an argument to be made, and it's been made many times, that they're sort of on sale right now. They're a little bit on discount, and everybody loves a deal, especially in this economy. So as you look at those names, which of them do you view as having the most upside potential over the next, say, 12 months?
I'll pick out two of them. I'll start with Microsoft, just because it really has, I think, gotten beaten up the most. And it's almost like they're at the mercy of their own diversification and product lines. They've gotten, of course, beat up with the sort of SaaS apocalypse, as it was titled. And so fundamentally, as they come out of that, I mean, they live in the enterprise rails. They have distribution like no one else. And so I am very much a believer that they will get their own AI trade right, if you will. And their distribution will be a huge moat if we fast forward. Another name that I've really been kind of pounding the table on is Meta. And that since, well below $600 a share. Last week, Meta just had its best week in years, up almost 13%. Obviously, a lot of the tech names down a little bit today. But literally just on the news that they were going to be more disciplined, that they were going to sell their AI compute, their excess compute that they had. And then, of course, their new model announcement, putting them kind of back in that frontier conversation, I think gives me a lot of hope for Meta. Again, seeing that discipline, I think, is really important for the street right now.
All right, I'm going to flip to the other side of the spectrum here, since I've asked all opportunity-based questions. Of these names and this sector that we're talking about right now in tech and mega cap tech, which name do you think has the most potential to surprise to the downside?
There's a lot of risk with, the spending in the wrong direction. I think that actually, not to kind of get both sides of the coin here, I think some of the reason Meta had been punished is because, we've seen Mark Zuckerberg over the years accidentally spend too much, in building things out. I think, again, that discipline is good. In terms of downside, I think that NVIDIA has had a lot of sell pressure against it from the hedgers. So I think that short term, again, sort of trading with some of the chip volatility, there could be short term concern there. Long term, I'm a big believer in NVIDIA. But, Oracle obviously has been punished. They're one of the big hyperscaler names. I think if they cannot convert their RPO fast enough, the market's going to continue to punish them. And so that's a name I'm a little bit more lukewarm on right at the moment.
Ted, really appreciate you joining us for an earnings preview, taking a closer look at some of these mega cap names with us. Always a pleasure to talk to you. Ted Thatcher, the president of Bright Lake Wealth Management.